Hey everyone, welcome back. So today is Tuesday. Got some possibly bad news for you guys. We're going to look into Core Scientific provided a securities exchange, what do they call it, a filing yesterday. We'll take a look at that. That might have some bad connotation with it. Greenidge also provided their Q3 results along with Hive. There's some bad news for Greenidge as well. So two are in trouble, one for sure. We'll get into all that. But as always, you guys know the drill here, not financial advice for entertainment only. Do your own research, please. And I'm investing in coins and companies for full disclosure. And this stuff takes me a while to compile and everything else. So if you guys enjoy this type of content, please hit the like button, subscribe. Helps me out tremendously. And let's get into, first we'll get into Core. So Core Scientific filed yesterday, November 14th, that they are going to be late on filing their Q10Q, I think, or 10K report, which is their quarterly results for Q3. And here's what they have stated. As previously disclosed, the company's operating performance and liquidity have been severely impacted by the prolonged decrease in the price of Bitcoin, the increase in electricity costs, and the increase in the global Bitcoin network hash rate. The assessment of the financial statement effects of these circumstances must be concluded to complete the registrant's interim financial statements that are to be included in the Q3 Form 10K or 10Q. Sorry. In particular, the company concluded that an interim assessment of its carrying value of property, plant and equipment, goodwill, and other intangible assets is necessary as of September 30th. The company has determined that it is likely that it will recognize assets or asset impairments on some or all of these classifications of intangible and intangible assets. In addition, the company is evaluating the appropriate disclosures related to liquidity and other matters. The complexity of the analysis for asset impairments and disclosures related to liquidity and other matters has caused delay in finalizing the registrant's interim financial statements. So that's never a good sign there. We know they've been struggling here for the past couple of months, especially with everything that's going on with Celsius. Celsius is not paying them. They're going back and forth between the bankruptcy court and everything else. We don't have any finalization on that one. And so I just thought I'd share this with you guys. That's not good news. So this is obviously bad for cores. And the other thing that I noticed was that they filed along with that. This was filed, when was this filed? I think this was filed also yesterday, November 15th. Okay, so this was filed today. So this is a prospectus supplement number 10 to the prospectus dated May 3rd. Now, help me out with this. I'm not a securities exchange or securities guru, or I'm not very proficient with it. I can look up, obviously, the filings and everything else. But when they change or update things, this is where I get kind of lost a little bit. So I went back to the Form S1 that they provided here, the link to, and at that time, the preliminary prospectus was for 186,172,423 and up to 6,266,667 warrants to purchase common stock. Now, in this updated one, which is what I'm guessing this is the reason why it's being updated, is because they're increasing that to 230.9 million and to 9.4 million compared to, what was it, 6 million. So it's being increased like 40 some odd million here and 3 million here for this. I think this is the main reason why. The only other thing I can think of was down here, Form 8K, that they provided information on departure of directors or certain officers, election of directors, appointment of certain officers, compensatory arrangements of certain officers. So this was done for Todd Ducini to serve as company's president and chief legal officer effective November 14th. Now, help me out here. Is this being filed because of this, or is it in conjunction with that information along with that they're increasing the dilution here to 230 million from 186 million? That's my question. I'm not sure how this all works. I wish this was a lot easier. There's a lot of legalese speak in these documents. It doesn't make it very easy for somebody that's non-securities and exchange professional. So if you guys have any information on this, I would greatly appreciate it. Hit me up in the comments down below. And then we also have, the same thing was updated today. This was also from, when was this? This was published today as well here, November 15th. And they're talking about another prospectus for 70.6 million, which when I look at the Form S1 that was filed, back here, it's still the same amount. So this leads me to believe that the only thing that they're updating here is the prospectus information on it, which is, again, with just the information on Todd Ducini becoming the president now, effective November 14th. So I wonder if this is just being updated, the information on those documents for that purpose. So there's those two. The only one that's kind of strange for me is the increase in shares. So is that also part of it as well? Okay, so cores. They are in a world of hurt right now with Bitcoin being low as it is. If they are getting charged close to 10 cents per kilowatt hour, they are in real pain right now. As they've stated before, that they are going to be charging their customers for 10 cents. Anybody that's paying 10 cents right now is not profitable. So for that reason, I think this is obviously pretty bad for Core. Them not being able to file their Q3 report also is pretty bad and pretty telling of the situation that they are currently in. But hopefully we'll get some more information from them going forward. Surprisingly, the stock actually went up today on this information. I don't know if it was this was the cause of it or Bitcoin was going up, but we'll cover all that in the next video that I'm going to be doing with some of the other miners that provided their Q3 results as well. Okay, so I just want to share this with you guys here on Core. Now let's take a look at our first one here is going to be, let's see here. First one's going to be, I believe, this is from Greenidge. So Greenidge, let me see here, make sure, there we go. So I went through their Q3 results, and that ended September 30th. Here's the tidbits that I wanted to pull out of it. So the revenue from our cryptocurrency data center operations decreased 12.9 million or 41% to 18.3 million, primarily due to Bitcoin prices decreasing by 49% compared to prior year, and to a lesser extent increased difficulty rates. The price decreases were partially offset by 19% higher volume of Bitcoin mined as a result of our expanded fleet, which resulted in a 115% increase in hash rate from the prior year comparative period. So that was, I mean, we know Bitcoin has come down in price, so that's a given. Things are going to be down for all the miners for the most part, unless you were able to keep up with the network hash rate increase and go crazy on installing miners. But this is obviously a given. Going down here, this is actually bad news for them as well. And the cost of revenue per megawatt hour, exclusive of depreciation and amortization, increased for both cryptocurrency, data center, and power capacity operations due to a significant increase in the natural gas cost per decatherm, which increased approximately 104% in the 3 months ended September 30th, 2022, as compared to the same period of 2021. So that is not good news. I was trying to figure out how much they are actually paying per kilowatt hour right now. And what they reported here is cryptocurrency data center was a cost of 14.6 million on just the cost of that. So I'm guessing, let me see if I can find it here. I found it someplace else. I don't have it probably down here. It's further down in here. I found it where they are actually using how many megawatts they were using and what the cost per megawatt was. And it came out to be the 14,675,000 for the cost on it. Now, correct me if I'm wrong on this, but this is just the calculations that I've done for it. So, really quick here, we'll take a look at Greenidge. Greenidge currently has average miners of 89 terahash on those. So what I did was I took that number, tried to figure out what they actually have right now. So they're at 2.5 exahash right now. I have them at 90 terahash per miner, which is close enough. It's 89 point something. It's really close. And I was trying to figure out what is the cost of electricity that they would have, that would need to have in order to pay about 14 million in cost on that. And that came out to be 8.5 cents right now. Excuse me. 8.5 cents per kilowatt hour. That got us to the 14.6 million for 90 days. So some days have 31, but this is just a rough estimate. So we're looking at anywhere between 80 and 0.8 cents and 8.5 cents right now on the power cost for them. That is not good. Based on where we are with the network hash rate, excuse me, Bitcoin price right now of 16,750 roughly. I even decreased the watts on these, on some of these older miners possibly. Those were I gave them 3,200 watts on those, might be even a little bit less than that, but that's kind of what I'm figuring right now. That got us to the 14.6 million in cost. they are not profitable right now as of mining, being at 90 terahash. There are things that they can do to possibly alleviate this a little bit. And they do have some miners that are 100 terahash. I would be turning off the 78 terahash miners completely. That would jack them up to the 95. At that point, they should be, well, we can see here. Let's go take a look at it. 95 terahash. We have 95 here. They got 2.5, well, it wouldn't be 2.5 exahash. How much would that be? If we take those out, you're basically out 1,200. Yeah, you're out 1,200. So that'd be 1.2 exahash less on it. So let's take it down to 1.3 exahash. At 1.3 exahash, you're looking at, let's see here. No, we can leave that at the same. So they would be a little bit better on that. They would be losing 477,000 on it, looks like, for the quarter. Yep. And then what was their cost? The cost is going to be the same, I believe. Oh, cost is going to be less than that. So cost would be down to 7 million on if they did that. And let's see here, cost daily revenue per 30 days. Yeah, I mean, you still are not profitable right now. The 100 terahash miners, let's see how many do they have of those right now installed. It looks like potentially they have, let's see here. They got these three, so they got 500, 800, 900 petahash right now installed of those. If those were only running, let's take a look here. So if they got 900.9, they are, let's see here, those are at 3350 roughly. 3350. They're still not profitable on those either. At 8.5 cents right now. They would have to be down to approximately 6.5 cents to be profitable on those. So they're in trouble possibly now. Now look over my work here that I've done, the calculations, see if they add up to it. I just want to make sure that I'm not spreading fear unwarranted. I've tried to keep this as accurate as possible based on the numbers that we do have. And at this point, it looks like they are going to be either shutting down or they're just going to be mining until things become profitable and hodling that coin until it goes up in value maybe. And that's the only two options I really do have right now. So let me know what you guys think on that. And let's take a look at their actual results here. So going up here, they have 43 million shares outstanding. Stock price now is at 76 cents. Market cap is at 32 million. And like I said, they currently at 2.5 exahash and 89 terahash average per miner right now. Looking down here, I did come pretty close to what they reported. They reported at 18.272 million in revenue. I had them at 18.4, so I was off by 0.92, so that's actually pretty good. I wanted to be within 2.5% up or down, and we are within that, so that's great there. That worked out pretty well. And let's take a look at the numbers that we do have for them here. So BTC mined for the quarter was 866. Starting hash rate was about 2.3. Ending hash rate was about 2.4. Average was 2.392 exahash. Hash rate increased a little bit here. BTC mined per exahash was 361, so it did increase here from Q2, which was good, but they still actually lost money at it. Cost to mine 1 BTC was about 16,950 minus depreciation, and if you include everything into it, is 54,000. So not good there. Enterprise value 32.8 million. Debt to equity is 2.43. Then that should be lower. Lower is better. So that has increased from Q2, which is not good. Current ratio is 0.86, or was 0.86 in Q2. It's now 0.55. It went down. It's not good. You want higher on that one. So that's not a good sign either there. Revenue was total 29.3 million. That includes other things as well. General administrative compensation was 10.2 million. That's 34% of their revenue there is used for general and administrative compensation. It did go down a little bit here from 35. It has been coming down the last couple of quarters, so that's good there at least. Let's take a look down here. Current assets. Current assets fell quite dramatically. Cash and cash equivalents was 38.5 million compared to 66 million in Q2. Accounts receivable also fell to 4.7 from 6.5. Prepaid expenses 9.6 from 11.2. And emission carbon offsets were pretty close to that, but total current assets fell to 54 million from 85 million. So that's not good. They're burning through cash. Total assets is down to 307 million compared to 342 million. Biggest hit on that was, let me see here. Well, the current total assets is the big hit on it right now. Everything else is pretty close to where it was in the prior ones. Quarters, liabilities increased. Did it increase? No. It stayed pretty much flat. 98.365 million compared to 98.84 million. Total liabilities decreased a little bit, so that's good, to 217 million from 232 million. So that's good there. Long-term debt, non-current of portion of and deferred financing fees went down to 96 million from 110, so that's good there. Other things stayed pretty much in line. And total stockholder equity went down to 89.5 million from 110.4, which isn't good. Total liabilities and stockholder equity also went down to 307 from 342, so that's not good there. Now, revenues have fallen down as well to 29.359 million total. Cryptocurrency data centers, that's Bitcoin mining, that was 18.2 million. Power and capacity was 3.6, so that's an increase here a little bit. Decrease in cryptocurrency mining, and services and other decreased to 7.4 million from 8.4. So that wasn't good. Expenses. Cost of revenue cryptocurrency data centers was 14.67 million. That is an increase from Q2 of about 3 million. Cost of revenue on power also increased to 3.7 from 3.172 million. And then services was 3.6 million, pretty much being flat almost, up a little bit here. Selling and general administration went down to 10.2 from 11.8, and we can see it has been going down, which is good. Mergers, let me see here. Depreciation and amortization went up to 13.8 from 4.8 million. Didn't have any impairment of long-lived assets. Remeasurement of environmental liability was down also to 0, so that's good. Total operating costs and expenses was 46.4 million, down from 117, so that's good there at least. Their gross profit minus depreciation was 19.69%, so pretty low there. And it's only going to get worse in this current quarter for them. Let's see here, what else do we have here that we want to talk about? Interest expense went down to 5.4 million from 6.9, so that's good there. Total other income went down a little bit, not much. Income loss before income taxes was 23 million. Net loss 23.15 million, and loss per share was 55 cents from $261. Something's not adding up here, I think. Might have been $2.61 instead of 261. I gotta look back in that one. Okay, so there's Greenidge numbers right there. And then let's take a look at the miners comparison here. And let's see if I can zoom this in for you guys a little bit, make it a little bit better to see here. 150, okay. So I've updated all of these numbers here just to get a quick look at it, and I also did a difference from Q2. So how did they improve or did they not improve? So Greenidge here is now all assets at 307, total current assets 54 million, asset to market cap is 11%. So market cap is only 11% of their all assets. Total current assets is 55. Total current liabilities is 98.3. That's a current ratio of 0.55. We want that to be higher, not below 1. Total liabilities is 217 million. Total equity is 89. Debt to equity ratio is 2.432. This one we want lower. Lower is better. And current assets minus total liabilities has gone up to 163 million from, let's see here if I can find it up here, from 146 million. So that's not good. It basically increased by 16.5 million in the wrong direction here on them. So we want to, one of the things I was looking for was for this to improve, but it hasn't. It actually got worse. So that's not good news. So they have a lot of things that are going against them. The electricity cost, the debt increasing here. We also can see here that, let me see here, debt to equity ratio is now 2.432. Prior to that is 2.106, so it has gotten worse there. And the current ratio was 3. Let me see here. Where is it? It was 0.868 in the prior period. Now it's 0.554. So that's not good either. So we got all these things that are going against them right now. I don't know what their plan is going to be, whether or not they're going to be shutting down or anything like that. But based on the information that we do have and the possibility of them being at 8.5 cents per kilowatt hour, that's tough for them right now. If that's the case, let me know if you guys think I'm wrong on this, or if you guys have better numbers. Love to hear it, but that's kind of what I was able to figure out, figuring that they're up 100% from just a couple months ago. It's got to be that they were at 4 cents or something like that prior to that, and they've gone up to 8.5 cents possibly. Okay, so that's Greenidge right there. Not a good sign for them. Something to be careful investing in them. As always, do your own research. This is not financial advice, but this is kind of the ones that I'd be shying away from right now, at least. Yeah. Okay. Next one is Hive blockchain. So Hive blockchain provided their Q3 as well. I think this might be their Q2 forward year 2023 or something like that. They have a weird way of doing it. But here's the information. And then we'll look at their numbers as well. So Q2 quarterly summaries generated revenue of 29.6 million with gross mining margin of 15.9 million. Mined 858 Bitcoin and 7,309 Ethereum during the 3-month period ended September 30th. Net loss before tax of 37.2 million for the 3 months period, and then increased working capital by 3.3 million during the 3 months, which is good. Digital currency assets of 64.9 million, so that's good too. And then impairment on the miners' equipment was 26.2 million during the 3 quarters, which third quarter, which wasn't good as well. Going down here, some things that I thought were kind of interesting. They go on to explain a little bit what's going on with Bitcoin, and we'll just go over this really quick. So after June 2022, we have seen Bitcoin price fall into the 20,000 range, fluctuating between 18 and 24,000 throughout July and August 2022. Difficulty has adjusted accordingly as the reduction in Bitcoin price meant the mining margins for some miners became unprofitable, and accordingly they would have shut down their operations, thus lowering the network hash rate, thus lowering the network difficulty. As such, this has had a stabilizing effect on Bitcoin price, Bitcoin hash price, as we have seen a floor of around 7 to 8 cents per terahash per day. This reflects the fundamental hash rate economy, whereby through a variance in either Bitcoin price or difficulty, we see that the hash price never goes below 7 cents per terahash per day. And in fact, even if we go back 3 years and study the crypto bear markets, most notably during the 2020, where the market crashed from the pandemic, and also post-halving bear market, where block rewards were halved, but Bitcoin price had not rallied yet, we still saw the 7 cents per terahash per day floor. Currently, hash rate economics have recovered to about 10 cents per terahash per day levels. As evidenced by Hive's gross mining margins, the company is still able to mine profitable during these periods, so that is good news there. And I agree with them. Whenever there is a squeeze on the miners, the least efficient, highest cost of electricity miners will shut down their operations for a time being until things improve, whether it's the Bitcoin price or the hash rate goes down or difficulty goes down, whichever it is. But that has always been the game here. Okay, so I agree with that. However, in September 2022, we saw hash price reduced to approximately 8 cents for terahash per day. And since then, in October, this was approximately 7 cents per terahash per day. This is a result of Bitcoin price staying under 20,000 range, while the difficulty has increased 20% since early September and has maintained these levels despite Bitcoin price seeing the 17,000 range, which we're at right now. So as of this date of the writing, with volatility of Bitcoin price as low as 16,500 USD, we are currently seeing Bitcoin mining hash price as low as 5 cents per terahash per day. With newer generation machines operating with greater efficiency, the break-even operating cost for miners depends on electricity price as well as machine efficiency. For example, if an ASIC miner that has an efficiency of 30 joules per terahash at current difficulty and a Bitcoin price of 16,500 would generate mining revenues of 8 cents per kilowatt approximately. Therefore, as long as the operating costs of a miner are below 8, they can continue to mine. If a miner has ASICs with efficiency of 40 joules per terahash, current difficulty and Bitcoin price of 16,500 would generate revenues of 6 cents per kilowatt hours approximately. So that way, as long as if hash price per day. So yeah, as long as you have really good electricity, you should be good on that. if a miner has ASIC, oh, we covered that. Let me see, approximately. Therefore, as long as the operating costs of a miner in this example are below 6 cents per kilowatt hour, they can continue to mine. When there is enough downward pressure on profitability, miners with higher electricity or operating costs and or miners operating machines with lower efficiency with a higher break-even price will not be able to operate profitably, and these miners pause their operations. Then the network hash rate will decrease and the difficulty will decrease as well. This will in turn improve Bitcoin mining economics. However, until that downward pressure is realized, Bitcoin mining difficulty will remain at these levels and gross mining margins will be smaller across the industry with Bitcoin price at current levels. So I agree with this completely. Right now, we are being squeezed. Well, the miners are being squeezed terribly by the price of Bitcoin, the network hash rate where it's at right now. That the only way this is going to get better for them is if Bitcoin price goes back up above 20 some thousand, and or some of the less profitable miners start shutting down operations or pausing operations for the time being when they are not profitable, especially the ones that are above 6.5 cents currently, it seems like. So not a good sign for the miners. This might be, I'm not saying that it is, but it might be that we're getting close to the bottom. If it's 5 cents per terahash per day right now, we might be getting close to that bottom point, unless we have some more bad news come out, and then, well, we could be going down to 13,000 with Bitcoin at that point. I think a lot of the miners are going to be shutting down for a time being, at least. Okay, so there's that information there. I don't think there's anything else. Oh, there it is. The only other thing I want to talk about is the Intel supply agreement. So these miners are expected to be delivered over a period of 1 year, starting in the second half of the calendar year of 2022. I think they said that they're supposed to start coming in this quarter, which is, we're at the end of the fourth quarter right now in 2022. The effect of which, when installed, would be an expected increase of over 1 exahash per second of Bitcoin mining hash rate. This target reflects the revised hash rate from previous estimates, as the company has adjusted capital allocation targets for the interim period, focusing on near-term growth. Excuse me. Sounds like I'm losing my voice. Okay. So there's that. I was hoping they would provide some more information on it, but they didn't. I would have liked to have known what the hash rate is on the miners, how many they're getting, and possibly what they might have maybe paid for it all. That would have been great to know. Okay. That is the things I wanted to talk to you, highlighted here. Let's take a look at their numbers for Q3, which is, I think, their Q2 or something like that. Let's take a look at it here. Okay. So Hive blockchain shares outstanding is now 83 million. Stock price is about $2.55 as of today. Market cap 212 million. They currently have 2.38 exahash. They're going to be going to about 5 exahash with the additional, I think I have the addition of the Intel miners in here as well. I do. Yep. Okay, so we got those. And let's see what else do we have here. They are about 40% operational right now. Future hash rate growth of 107% possibly from 2.3 to 5. And currently their hash rate average per miner is around 86 terahash right now. So they do have some older miners that possibly could be getting turned off, but as long as they have pretty low electricity, around 4 cents, they should be okay, I would think. The 74 are going to be challenging the 68. I hope they are not plugging those in. I don't have them even plugged in here anywhere, but if they are plugged in, I would unplug those probably. Okay, so that's that. And let's take a look at the numbers here. Oh, and I forgot to do this part. See, I was dealing with too many numbers today. Too much stuff going on. So let's take a look at it here really quick. Let's see here. What did they mine in July, August, and September? They mined quite a bit of Bitcoin. There was 1,380.2. 1,382. 1,382. Starting hash rate would have been, ending hash rate was, okay, that's weird. Let's take a look. I think I was using the hash rate for the combined GPU miners as well. In here, let's see, what do we have them at? Sorry about this. I should have gotten this done before I did the video. Let's see here. July, we had 3.56. We were at 3.490, and we went down actually to 3.490 to, okay, 3.490. 3490, 3490, and then we went down to 263. Where did we go down to? September 2630. Yep. 2630, 2630, and that's based on them stopping their GPU miners. They're not mining as much as they were before with the Ethereum. Okay, now as far as BTC mine per exahash went up quite nicely to 451, and that is based on how much they mine, but they did come down here, and the reason for that is they were mining Ethereum through maybe the middle of September, which helped them out tremendously, but then it dropped down quite a bit here because of it. So that's why they're getting a little bit better efficiency here than they probably would have otherwise. Cost to mine 1 BTC minus depreciation is, I got them at 9.8 thousand, so they're still in pretty good shape there. Enterprise value, let's see here, probably should have updated this really quick. Let me do this. Okay, and then go over here. 228 million right now. Debt to equity did improve a little bit here to 0.21 from 0.22. And their current ratio it did improve as well to 3.74 from 3.1. So that's good news there as well. Let's see here. Revenue and general administration is only 17% of that, so that's pretty good. Slower than some of the other miners here, so that's good. They're keeping that in check. It did increase a little bit to 5.1, so that increased actually, what is that, 800 or so, 1,000 in that. I would have liked to have seen that come down. There was 9% in Q1 of 2023, and then which was last quarter, and now 17%. So I want to see that come down. But obviously, Bitcoin price has been coming down. The revenues are way down, and that's the result of it. But nonetheless, it did go up a little bit. We want to see that come down. Okay, current assets, 8.142 million. That is an increase from the prior period, so that's good. Amounts receivable also increased, so that's good. Investments did decrease a little bit to 6.4 from 7.9. Digital currencies also decreased a little bit to 64.9 from 71, and that is a result of Bitcoin coming down in price. And forgive me, I got to take a sip of water. My throat is going to kill me here. Okay, let's see how long we can hold out. Property and equipment also went down to 132, and that's based on reevaluation of the miners, how much they're worth. Long term is pretty much the same. Deposits went up a little bit to 45 from 43. Right of use decreased to 9.8 from 11.2, so that's good. Goodwill also decreased a little bit, so that's fine. Their total assets did decrease to 278 million from 319 million. Currently, accounts payable and accrued liabilities did decrease, so that's good to 10.3 from 16. Current portion of lease liability also decreased to 1.9 from 2. Long term decreased also about, 900,000 to 7.8 from 8.7. Loans payable stayed the same. Current income tax liability did go up to 2.2 million from 887,000. So total current liabilities is 23 million from 29, so that's good. That's a decrease there. Total liabilities also decreased to 49 from 59 million, so nice decrease by about 10 million. So, and let's see here, revenues. So revenues came in at 29,596,000, which was a decrease, but we know it's because of Bitcoin price coming down. Operating and maintenance costs, that went down to 13.6, so that's good from 17. So that's a good sign there. Depreciation and amortization was down a little bit to 24 million from 25. And let's see what else we have here. Expenses, general administration was 3.2. So that was a slight decrease here from 3.3. Foreign exchange gain was actually a nice gain there of 7 million. And share-based compensation was 1.9. So there's quite a bit of increase here from the prior period of 953,000. I want to see that, go lower if possible. Let's see here. What else do we have here? Unrealized investments, negative 1 million. Impairment of minor equipment, 26 million on that one, on this one now. And finance expenses was about the same. So net loss gain income from the period was 37 million negative. And going down here, they are gross profit minus depreciation at 53% right now. So that's pretty good. They were at 61. The 53 is still not too bad. Let's see here. Net loss was 37.7 million, and basic and diluted share loss that should have been 0.45 cents, I believe. Why did it come out that way? Negative 45. 0.45, negative 0.45. Should have done this. There we go. So that'll all stay the same. 82 million is what we have right now. Now, as far as their current numbers, and I did come pretty close again with Hive as well. I had them at 29,775,000. They came in at 29,596,000. I was off by 0.61% on them. So I'm happy with that. I have updated the numbers here for them. We're using the current quarter that we're in, which is very fluid. It's going to change either to the downside or to the upside, depending where Bitcoin goes. Excuse me. And we're using the last 3 quarters, which are Q1, Q2, and Q3 of this year. And now we have them at a combined total of 140 million for the possible 4 quarters that we're in. 50% net income from gross revenue, we're looking at 70 million, and a P of 20, we're looking at $16.86 for them. If we're at 75% net income, we're looking at $25.30. That's if Bitcoin starts going back up right now. And I'm using the Bitcoin average price here for the month, which if we look at it here, we're in the 15th. It's coming up, 18,830 right now is the average on it. If we average it out, what do we get? 18,830. So the longer time Bitcoin stays at the 16,000 mark, the lower the average price is going to go down, as the majority of the miners are selling or accounting their Bitcoin on a daily basis of what they mined. So we're using the average price for that. Okay. Let me see what else can I share with you guys. I think that's it. Otherwise, not too bad. Minor comparison. So for Hive, comparing it to Q2, Hive is right there. They actually did better. They decreased or increased how much money they have left over from current assets to liabilities by 7 million. And if we look at it over here, Hive was over here. They had 31 million. If you take current assets minus total liabilities, they had 31 million left over. Now they have 38 million. So that's an increase. So that's a good sign there. Other things. Market or assets to market cap is 76%. So they're most of these miners are undervalued, but they're a little bit closer to what their market cap is just on the assets alone. Market cap is 212 million. They have all assets of 278 million. So they're still under for that part of it. Total current assets, 88. Total current liabilities, 23 million. Current ratio, 3.749. What was the prior one? See, your Hive is right here. So they had 3.112, and they had a 0.228. So that is a nice increase in that one as well. So they're doing all the right things that I can see right now. They're getting rid of debt. They're, having more cash on hand, basically, and doing the right things that they need to be doing in this bear market to survive. Let's take a look at it really quick here while we're thinking about it. I just thought about it. Why don't we look at it? They are at 86 right now per miner on average, and they have, let's just say they have 2.4 exahash right now. 85 terahash, 2.4 is that, and their cost is around 4 cents if I'm not mistaken. So they are still currently profitable with a 32% profit margin right now, if that's the case. Okay, so no worries there. As you guys know, I still have Hive. I haven't been buying down into the as the price has been falling, because I bought into them back in 2017, 2018 when the stock hit a low of 8 cents, which was just crazy. But we got out of it. Now I'm just waiting for the next bull run to have even better gains. But as always, you guys need to do your own research on this. So that is it. I hope you guys enjoyed it. It's a lot. I still have I'm going to do at least one more video tonight. I'm going to try and get into, let me just show you what else I have available to go through. So we just did Greenidge. I still have Mawson to do. Right, we already did. Hive we just did. So we got DigiHost, Mawson, Annie, Sphere 3D, and Solana to go through as well. So I got at least 4 more quarterly results to go through. I'll try and get at least 2 more done tonight, and then we'll do the other 2 tomorrow. Because I'm running out of time. I still want to spend some time with my kids and family before bedtime, so I'll call it a day here. Let me know what you guys thought of all this, especially with the numbers on electricity and things like that. It would be nice to get the confirmation from somebody else, an outside party, saying, yeah, my numbers are correct, or if I'm wrong. And that's it. Thank you so much for watching. Spreadsheet is going to be available to my Patreon members as always. Thank you everyone there for their continued support. Love you all for watching. I'll see you guys in the next video tonight. Don't know when that one's going to be out, but it will be out. All right. I'll see you guys.